Hey guys, Chase Majerus here, host of This Week Today. Welcome back. Last week we had a little teaser talking about how we were going to bring on some social media and marketing influencers with the mortgage industry. And we have that today with Bill Bodnar of Tabrasa. Bill, welcome to This Week Today. Really glad to have you.
Thank you. Thank you for having me, Chase. Excited to be here.
Of course, yeah. So before we get into all the banter, what's going on with you're in New Jersey, correct? How's the quarantine there? I know it's way more intense than it is here in California.
Yeah, it's more than we would want. I mean, we're going to have, a few dark days in the days ahead as it relates to deaths and stuff like that. But I think we're getting close to the end, and better days are ahead.
That's great. I mean, it's all we have at this point is hope and the ability to socially distance. So we're glad that you guys and your family are safe right now. What do you do in quarantine? I know I've been watching a lot of movies and playing video games, but are you like a TV show, Netflix binger, or what?
Well, I'm doing probably what a lot of people are doing. I'm gaining weight.
Yeah.
Trying to get outside, doing exercise, getting some walking in every day, getting outside, breathing. It's spring here, so it's finally, getting out of winter. So
Right.
It's nice to get outside a bit, hitting golf balls outside the backyard.
Oh,
and
there you
so
go.
getting a little bit of that and dreaming of getting to playing golf again soon.
Oh my gosh, you and me both, man. I mean, here in San Diego, we just started clearing up from some rain, and all I can think about is, gosh, that course is probably so pristine right now.
God.
No one's been on it in at least a couple weeks.
That's right.
Yeah. So, well, anyway, we didn't bring you on here to just talk about the quarantine. I wanted to talk about the market right now because remember, for those out there watching this segment is all about giving you guys insight and education into the market right now. And Bill Bodnar with Tabrasa is great. That's what you have. Bill, can you tell us a little bit about Tabrasa?
Yeah. So Tabrasa, we provide a bunch of software as it relates to like sales and marketing, lead management, CRM functionality, and we have the Mortgage Market Guide, which is our market intelligence solution, which helps realtors and loan officers, perform better, understand the market day in and day out. And weeks like the last couple are why these things are important.
That's perfect. Well, that's exactly why we bring you on the show, because you guys already work with what's happening in the now.
Yep.
So first off, I wanted to ask you where we talk about rates a lot on the show already, but I want your feedback and your knowledge about this. Where do rates come from?
Yeah, sure. So, well, the media doesn't help us here, right? And because when you think about the media, they talk about the 10-year note a lot, and they say, well, the 10-year note, it's gone down. It means home loan rates have come down, and it's not true. Home loan rates are not derived by the 10-year note. Home loan rates are driven by mortgage-backed securities. And if you think about it, the 10-year note is backed by the full faith and credit of the U.S. government. A mortgage-backed security is a security backed by a mortgage. So it's a very different instrument. It trades differently. And, Chase, just the last couple of weeks, I'm sure, you folks at Synergy have seen, there's been an amazing disconnect, right?
Totally.
I mean, totally disrupted. And sometimes the 10-year note and mortgage-backed securities move in opposite directions because the 10-year note is something that, when there's ultimate fear, like we've had over the last couple of weeks, there's something called like a safe haven trade where a lot of money drives into the treasury market. But at the same time, mortgage-backed securities have a different risk. And one of the new risks is default, right? Because we have a nice high unemployment rate going up now. And so it's a very different animal, but it's unfortunate. And I think it's an opportunity for mortgage professionals, realtors, even the consumers to, kind of align with the mortgage professional that's, watching the true driver, which are mortgage-backed securities.
Totally. So now help me, just somebody who also struggles with this every now and then. If they are not the same thing, how come the Fed is still always talking about mortgage rates and stuff like that? Don't they still have something to say or do with that?
There's another, okay, perfect. So the Fed can't really theoretically help mortgage rates with monetary policy, right? So there's two, but they are helping us now, and we'll talk about that. So, for instance, last year, they cut rates 3 times, for the first time in a decade, right? And, they talked about the 10-year note going down, but the big thing was the Fed rate cut. And what was remarkable, and again, folks in the business, we lived through this together, mortgage rates improved from late fall of 2018 all until, let's say, the end of July, which was exactly when the Fed cut rates for the first time. And now the housing market back in July of 2019, I remember people waiting. They didn't want to take a mortgage out because they were waiting for the Fed to cut rates. And that was as good as things got. And in fact, the Fed cut rates 2 more times for the remainder of 2019, and rates actually went higher for a little bit. And so Fed rate cuts don't have nothing to do with mortgage rates, but they are helping us now. And there's been a lot of uncertainty. The back end of the mortgage market has been very unstable. So they've come in to provide stability by buying mortgage-backed securities, right? And they've been doing a great job, candidly. They had to do things to kind of provide liquidity. And in doing so, in buying these mortgage bonds, they're not doing this and you've heard a lot about it, they're not doing this to drive mortgage rates to 2%. So for any consumers on the call thinking they're buying bonds to do this, they're not. They're just trying to get the mortgage-backed security market to behave correctly, which I think they're doing a good job right now.
Right. Well, thank you for finally untangling the string in my brain about how this all works. I hope someone out there is watching this and has a better understanding of this as well. So speaking of rates, though, where are they at now, and what can we do or to understand where they might go in the future? Do you have any insight about rates in the future?
Yeah, I mean, frankly, if you and I knew where rates were going to be, we wouldn't be here. We'd be parked. We were in an island, right? That's the good story. But you can read the tea leaves, and there's a couple of things that we're thinking about at Mortgage Market Guide. In the near term, right? In the near term, we're still in the midst of this highly uncertain environment. And so with the Fed buying mortgage-backed securities, and what they're doing is they're buying an unlimited amount, and they can continue to buy, but they're trying to buy less to not disrupt the market. And that's a whole other conversation we could have for another day. But rates in the near term should not go up whatsoever. Still uncertain. We're watching unemployment tick up. We don't know how we're going to come out the other side. Heck, Chase, we don't know the depth and the duration of the economic impact. So near term rates are going to be great. But when you look longer term, there are certain things you have to watch. In fact, just today, the Fed came out and said one of the things they're concerned about is inflation. Now, we haven't had inflation. In fact, many young folks out there, inflation is really the driver of rates. We talked about what drives rates. Mm-hmm. It's mortgage-backed securities, but it's also the fear or the threat of inflation or expectations of higher inflation. So That's something we have to watch. And so with all of this paper, all this printing of bonds, there's a fear about inflation. Then the other thing that we have to think about and why rates can be higher further out is, the Fed has all this stimulus, right? We have a relief package, we have the PPP, we have all this stimulus, $6 trillion worth, right? The Fed and the Treasury don't open up a safe and say, here's some money, let's go. They have to print and sell bonds. Right. And when they do so, it gets flooded into the market. And so it depresses prices and actually creates higher rates. And so you look at the 10-year note, it's actually higher and off the best levels of a couple of weeks ago. And some of it is from just the notion of, wow, there's a lot of supply coming to market. We're going to have to deal with it. So that's coming in the future, and that's something that we're tracking. So great rates for now, not going to go up really that much anytime soon, but there are some things that we have to watch, including inflation and this oncoming supply.
I really like how you're able to explain that whole thing, and at the very end, just summarize what you just said. I don't normally that's my job. You just did it for me, so thank you. So what would you say to first-time home buyers right now, or people who would like to be a first-time home buyer right now?
Few things. First off, I think there's opportunity. There's always opportunity when it seems things are dire, and right now things look really uncertain. Oh my God, what are we going to do? And folks that bought stocks a couple weeks ago looking pretty good now, right? From 18,000 to 24,000, that's a pretty nice rise. And,
right.
I think stocks may have already found their bottom. Right, we'll see. Hopefully, the only way to go back down is things have to get worse again, which we certainly don't want to hope for. Of course. But for a first-time home buyer, in the midst of even this uncertainty, we have 16.7 million people in the last 3 weeks sign up for unemployment claims. So unemployment's ticking up. We're probably upwards of 10% already. Mm-hmm. A first-time home buyer is coming into this situation with a real opportunity because they don't have the baggage of being tied to a home. I think some sellers are going to get a little anxious right now that, oh my God, some buyers are going to be out of the market for temporary, right? Unemployment's not going to be 10% forever, but it's going to be high for a little bit until we resolve this. So There's a window here where I think a first-time home buyer has an opportunity to, maybe they come to a home without that contingency of having to sell a home. I think that's really interesting. They also have the tailwind of the interest rates that we talked about. The Fed is buying bonds now, but Chase, they're not going to buy bonds forever. They're doing this to stabilize the market, and rates are not going to. I would not bet on a 2.5% 30-year mortgage, right? There's capacity. There are issues as to reason why rates are going to hit their best levels, and they may have already hit them. And so I think you take those two things are a great tailwind. And then the third one, and for many first-time home buyers, they live through as youngsters, After 9/11, we had an incredible housing market. It had to do with it had to do with stimulus. It had to do with just the American, spirit. And that's going to
Right.
repeat itself again this time around. Housing, before we walked into this horrible uncertainty in this virus, was taken off. And
Right.
it could easily jump right back on. And when you see household formation coming, so bottom line is, you're talking to a youngster looking to buy a home. This is an incredible time. And of course, it's well documented, the wealth creation caused by buying a home. And if you wanted to throw one more thing on the fire, we talked about inflation. If you think inflation's coming, owning a house is the best thing to do rather than renting. So there's just a million reasons for a young man and woman to buy a house these days.
That's great. That's terrific. I also like how you call us youngsters. I haven't been called a youngster in a very, very long time.
Yeah, you are a youngster.
Yeah. Well, Bill, thank you so much for joining us in our first episode of having mortgage real estate influencers out there, giving us some education and some insight on This Week Today. Thank you so much. Thank you, Tabrasa. And again, we'd love to have you back on at some point. And we'll keep everyone out there ready for the next time that you are coming back on.
Thank you very much for having me. Thank you. Stay safe, my friend, and we'll talk to you soon.
Definitely. Thank you. And by the way, I love the flag right behind you. Saturdays are for the boys. Very funny.